If anybody wants to come up, please just request.
And
it's open space.
logic call. It's it's crazy what's happening right now with our company. We get us up on the stream. If anybody wants to come up, please just request. It's open space.
Happy birthday to Adam Aaron.
Got the YouTube up too. Good morning. Good morning. Logic call. September 30th. It's happy birthday to Adam Aaron. It is his birthday today. Get us up on the stream. If anybody wants to come up, please just request. If you just joined, please retweet the call out so everybody knows we're up. We're gonna do a very it's so simple what's going on right now. I've never been more sure about this in my entire life.
I'm gonna go over, but we can in and out and
get some things on here. Said feel free too, if you want to come up and say something, feel free to request. This is an open space. I'll go over what I'm going to go over, but we can do that in and out, and it doesn't have to be a set thing. So
what's going on, man?
Just cleaning up. There's Omni. There's my man. Cleaning up the YouTube stream real quick. What's going on, man?
I don't know, man. I think up is down is up. But every time, like, the little things that you say that stick with me. Like, I'm watching, all the entire market go down, picking up on other stocks to watch, growth stocks. And I'm like, yep, this is our play. This is our play. This is how it works. It feels good.
Like these big...
I'm telling you, a lot of people have been, oh man, I've lost, 30, 40, 50%, blah, blah. If you would have been in Netflix or you would have been in Facebook, you would have been in even worse shape at this point in time.
And those are not going back up.
No, those were hyperinflated because of the pandemic. AMC was not hyperinflated until, we ran to 75. But here's the super basic thing about all of this. The laws of supply, and Bigum's hit on this good. Bigum's posted a supply and demand curve chart, which I love. The laws of supply and demand have been completely corrupted on AMC. If you have extremely high demand and a limited supply, then the price of the supply is going to increase. And if that supply is completely owned, then the price can go exponentially higher because no more can be made, right? So there was 516 million shares of AMC. We know we owned over 80 to 90% of it. So in theory, with a limited supply and high demand, the price should have went up exponentially. Well, then it just started going down. But at the same time, we knew people weren't selling, and every day we read, hey, I bought more AMC today. And this is where it gets really funny. If you have high demand with unlimited supply, right, the price will go down the more that's bought. Because the more supply that's put out into the market, the less value it holds. That's what's happening to AMC and APE. These cocksuckers are selling endless shares. They can sell as many synthetic shares out into the market as they want.
Which is true.
We are, and Lou, and I don't like Lou, but Lou said this a long time ago, but he said it for the wrong reasons, and he said it the wrong way. He said, stop buying AMC. You guys are diluting your own stock, which is true.
Absolutely. Yep. You hit the nail on the head right there.
But the problem is Lou, his motives for saying that, I don't think were good. I think that the market makers were trying to push people to stop buying AMC and APE because they can't come out, say if you went in, say the top 10 people in this chat went in and placed an order for APE this morning, and our brokers came back and said, sorry, there's no shares available. That's basically admitting that the entire supply is bought and the price should be going up.
And they keep doing it and they're stuck. Yep.
They're stuck selling endless shares. We're all buying the price. We're literally buying the price down because we're buying an endless supply.
Because if they legally
Which what I
report,
talked about is
say
called
a broker
stealth
came out and
dilution.
reported that there's 5
It's
billion
dilution
AMC and
that'll
APE
show
shares
up
out
in
there that
price
they've
action
sold,
because the
that
supply
gives Adam
increases,
Aaron every right
but
to
it's not
recall the
dilution
stock,
that'll
which would
show up
cause
in the
the
shares
squeeze.
outstanding. Because if they legally reported, say a broker came out and reported that there's 5 billion AMC and APE shares out there that they've sold, that gives Adam Aaron every right to recall the stock, which would cause the squeeze.
I just don't see how they plan to come. I mean, realistically, it seems like eventually, and I'm hoping this is not the case, they're going to be like, look, can you guys settle for this much money? Because I can't imagine like some people who have 40, 50,000 shares and they're looking to get, let's lowball $10,000 a share. Let's say $5,000 a share. You know, and I'm sure there's millions of people with 10,000 shares looking to get at least $1,000 or $5,000 a share. It just seems astronomical at this point.
About what was going on.
Today,
So
really, so when I was pressuring Adam Aaron a few weeks ago and everybody
8K
was giving me
and the
shit and
prospectus for
everybody
8
attacked me over the
dropped,
weekend,
and I
people
read
don't understand I do
in
it for a
that
reason.
they were
I
offering
wanted the
a
community to get worked up
one-time
about what was going on
chance
so
to
that they
purchase
would give
any
us more
over
information.
allotments, which is
When the
basically their way of
8K
saying,
and the
once we
prospectus for
sell
APE
all
dropped,
425
and I
million
read
APE, if you need
in
another
that
50
they were
million more,
offering
you
a
have one chance to buy.
one-time chance
When I
to
read
purchase
that,
any over
that's the information
allotments,
I needed
which is
to
basically
know
their way
that
of
there's a
saying,
massive
once we
supply and
sell all
demand problem going on
425 million APE,
in APE.
if you need another 50
And
million more,
also,
you
this
have
is a
one
little more
chance to
tinfoil
buy it.
hatty. Why would
When
they
I read
create
that,
5
that's the
billion
information
APE
I
unless
needed
they
to
knew
know
they could
that
sell
there's
it?
a massive supply and demand
There
fraud
is
going on with
literally
AMC and APE.
4.7 or
And
4.6
also,
billion
this
APE
is a
sitting
little
in the
more
treasury
tinfoil
right now.
hatty.
They
Why would they
created that for
create
the over
5
allotment
billion APE
clause
unless
that
they
they put in
knew
the
they could
8K
sell it?
in the prospectus for the share
There
offering.
is literally
Nobody in their right mind
4.7 or
would come out.
4.6
Not even
billion APE sitting
Highcroft
in the
Mining
treasury
did
right
that.
now. They created that for the over allotment
That's almost twice
clause
of
that they
Tesla's
put in the
fucking
8K
outstanding.
and the
Why would
prospectus
you
for the
create
share offering.
5 billion APE unless you knew
Nobody
you
in
could
their
sell
right
it?
mind
And why
would
would
come
you
out.
create
Not
that,
even
Mike, unless you
Highcroft
planned on
Mine did
diluting your
that.
stock down to $1?
No, that's
He
almost twice of
knows.
Tesla's fucking
If
outstanding.
it's just supply
Why
and
would you
demand
create
basics,
5
man.
billion APE unless you knew you could
Once
sell
again,
it?
if you
And
guys
why
could
would you
tweet out this
create that
call,
much
I would
unless you planned on
appreciate it.
diluting your stock down to
I want
$1?
everybody to hear how basic this play is.
He
Yeah.
knows. It's just supply and demand basics, man. It's, once again, if you guys could tweet out this call, I'd really appreciate it. I want everybody to hear how basic this play is.
I think I did. But okay, so not financial advice in your opinion. Like, just obviously, there's, because everything's so cheap. It seems like, you know, AMC is cheap, APE is cheap, and HYMC is cheap. My problem is every time I look at it, I want to buy some more APE and I want to buy some more HMOIC. But the idea is, I like accumulating as many shares as I can. So there's always a decision. You know, it's like, shit, it came under $3. So now I should buy 100 of those. But for 100 of those, you could buy 400 HYMC. You know, that kind of sucks. And it looks like gold, silver is really hitting its stride. It's hitting its bottoms. It's about to, next year or so, whatever, Highcroft will be up, metals will be in, and that'll just run. And I don't think I can accumulate as much APE before. It feels like APE is going to run, or relatively sooner, if I was guessing, than HYMC. But that could change in a heartbeat.
Yeah, it's such a great. I know people are down. I know they're looking at their P&L and they're freaking out. I'm telling you, I don't even look at my balance anymore. I wake up, I look at the chart a little bit. I kind of calculate out supply and demand ratios. And all I see, this is all I see in this play. And I think it's the only DD that matters. I won't say that. There's a lot of DD out there that matters. But I think the main DD, the pin the tail on the donkey, the bullseye DD, is that our basics of supply and demand have been completely reversed. We are buying so much of this shit that it's causing us to dilute the price, but they can't legally show that in the shares outstanding because that's admission of fraud. They can't stop selling to us because that's admission of fraud. They can't show the real shares outstanding because it's admission of fraud. That's why we're having these price glitches. That's why, you're getting the FINRA price showing 13,000 or whatever. You're getting people waking up to their fucking E-Trade alerts months ago telling them we're at $340 a share. Manipulating supply and demand is such a stupid thing to do because your data is going to be fraudulent. So when people are in there whipping, pencil whipping and paper pushing and making the data to go to the feed for the charts, they're screwing up. It's just so basic, man. Like all this, I don't even know, bro. I'm smiling so fucking big right now. I can't even tell you guys because I know that they're busted. I know they are.
Oh yeah, I mean, someone who's trying to generate some wealth to get ahead in life. It's like, listen, this is the opportunity where you have $200 or $300, or even $100 you take a month and put it into these stocks that technically are not showing their price. And if you could put a little bit, you avoid a pair of sneakers or going out a weekend, 300, 200 here, and then this thing corrects. And it's like, you're set for life, but you just had a huge bonus out of nowhere. They're offering you this gift and they're stuck offering you these discounts every fucking day.
It's not even that they're offering us discounts. It's that they are literally, I'm telling you, they're short the stock, right? But it's not helping them because they've sold so many freaking shares. Some institutional shorts, like some guys that are not market makers might be making out okay. But here's the other thing with the market. The market works on two things, buying and selling. One side loses, the other side wins. Right now, everybody's losing. That doesn't work. On January 27th, we were supposed to squeeze. They stopped it from squeezing because they were caught in their bad shorts. So they came up with this fucking scam. Let's just sell more shares out into the market than exist. We'll drop the price down. We can cover our shorts and people will sell off when it runs to 72, right? They planned that shit. That run to 72 was planned. It was controlled and planned and they wanted everybody out. Then they doubled down and they screwed themselves. When it ran to 72 and dropped and then ran back up to 56 within a week, they were absolutely freaking screwed. So what they've been doing is selling endless shares out into the market, making us drop our own price based on dilution through endless buying of shares, endless supply, and they're trying to get us to sell. That's why you see these clowns freaking out on TV saying that retail isn't selling. There is no way, if we own the float, that the price should be going down. There's no way. Unless they create short interest out past what they're legally allowed to, out past the 40%. So when the price goes up, they fail to deliver and short it as much as possible to keep us from squeezing, or they halt it 13 times and discourage everybody. But the very basics of this is if there was a set, constant, limited supply and everybody bought it and is holding it, the price should continue to go up as short sellers need to buy shares to get out of the play at higher values because it's more rare. But what they're doing is they're just every day people are coming in and buying AMC and APE. And every day we're hurting our price action by buying that, because if we're buying synthetic shares that don't show up on the book, it's going to dilute the price. It's going to dilute that market value, which I'm not telling you to stop buying. I say dig the hole as deep as we fucking possibly can. I'm going to continue to keep buying. Eventually, when Adam Aaron comes out and offers, and this is a coming across the aisle type of thing from Adam Aaron. He's saying, I know you're caught. I know you're stuck. I'm going to come out and offer you 425 million APE that you can buy at a premium price, which is going to make the dilution of the price disappear. They're going to fulfill those synthetic shares with real shares and real buying pressure. So we're going to see our price action, but then in the writing, in the contract, they said, past the 425 million shares, you have one chance to buy any over allotments, which is why Adam Aaron created 5 billion APE shares. He knows these institutions need to get out of this play. The new fiscal year is coming up. The government's rolling their money over. The banks are rolling their money over. And some big shit's about to happen. This is dude, it's crazy, man. I'm sure there's a lot of people out there right now going, why is he so jacked when our price is in the dirt?
I think everyone's getting impatient and they're getting frustrated. I think a lot of people, listen, I know people took out lines of credit to. Some people, it's supposed to be money you don't need. I understand it. Everyone gets excited,
Yeah, the first thing I would recommend to everybody and anyone is do not buy stock on margin. Like if you're an experienced trader and you know what you're doing, feel free. But if you're just an ape coming in to buy some shares in HODL, do not buy any stock on credit or margin or any type of loan. Don't sell your house to buy stock. Just play it safe, because I'm going to tell you right now, if this does squeeze, even if you own 100 shares, it's going to be life-changing money. If this thing runs to $500 and you own 100 shares, the profit you just made on that is insane, and you're going to be able to take that and reinvest it at the bottom of the market. So don't think that you need 10,000 shares. Like for the people who own 1 or 2 shares and that's all you got, good for you, because if this thing even runs to $300, that's a lot of cash that you didn't have before. You can take half of that and reinvest it into something like Highcroft at pennies on the dollar.
See, that's my concern. It's I feel like which one's going to run. Highcroft seems like a good long investment for me. That's my opinion. And I would love for this to run before and throw a ton of it in Highcroft. But if Highcroft runs first, which it gives me that feeling, that fact that it's 58, 59, and 60 cents. They can make it go low, but I can't see it. It doesn't make sense, from the fundamentals that it should be that low already.
There's an article that came out that said they increased short interest on Highcroft pretty significantly in September, which is why the market down and the price is low. But I have a feeling what's going to happen before any delisting even comes up, you'll see either Adam Aaron or somebody come in and buy shares and pump it back over $1. The truth with Highcroft, what I think we're going to see is that gold and silver are going to pump based on global economics. And then you have Highcroft Mine with a top-notch CEO, but most of these mines that come out and say they're a gold mine and they're exploratory, they don't have a lease, they don't have equipment, they don't have nothing. Highcroft has 72,000 acres, they have leases, they have all the infrastructure in place, and they're currently already processing silver and gold on leach pads. When they start mining the new areas in 2023 and they're pushing that ore through the POX processing, now they have the leach pads and the POX processing producing silver and gold. And I still think, me personally, Sprott's really big into uranium. Nuclear power is going to come back with a vengeance because of everything that's going on in the world right now. We're going to have nuclear reactors starting back up like crazy. POX processing produces silver, gold, and uranium. I think they're going to do something with that because Nevada, in that area, when you look at the geo surveys from the USG or whatever the government site is, it shows pretty concentrated deposits of uranium in Nevada. So that's my Highcroft tinfoil theory, is the uranium. But just based on their infrastructure and the amount of silver and gold they're going to be able to process in 2023, they should be able to be profitable, especially when they zero in on the highly concentrated silver and gold, the Midas veins. Highcroft back in 2016, they were only mining cyanide soluble gold. They didn't want any silver because it was only like $12 an ounce. They literally, all the waste material they discarded, they're going to reprocess that now because they know there's silver and there's physical solid gold in it. The solid physical gold they were not even looking for back in 2016. They were looking just for the displaced micro mineralized gold deposits that they could use on the leaching pads that they could sift from or leach from. So.
Yeah, let me say something real quick. Like, first of all, I don't know where the Froggy thing, but both you and Froggy Style sitting down there, not talking at the moment. Both of you guys, it's funny. I'm gonna say it right now. Both of you guys are my right wing or middle wing brothers that I really appreciate. Froggy Style should definitely jump up and talk because you guys really know your stuff, and I appreciate it. And it's funny because every time I see you guys post it, I'm like, oh man, this dude again posted. I'm sure we like go back and forth, but I appreciate and love you guys. You know, that's across the aisle. But Froggy should jump up and talk. You guys have a lot of good information that probably people can listen to. And if so, I would just step down and listen for a bit because I got to train someone in about 10 minutes. But he should jump up and talk.
Yeah, he's always got a spot up here, man, for sure. I mean, everything we talked about back in, what was it, May? We did no options May. We talked about no options to November. And a bunch of YouTubers came out and were hating on us for it. And then lo and behold, an article comes out and says, oh, retail left the play because the options value has gone down. Citadel literally pays like 80% of payment for order flow goes into buying options trades because then they can front run the market. That's why you get price fixing every Friday. They drop it below max pain. They drop it below Hoyles usually. Highest open interest on the lowest strike. People lose their premium and it shoves their puts in the money. So we nailed that one.
Yeah, both of you are usually ahead of the game. Pretty and on point. So we appreciate you guys.
And then what else did we do? We talked, I don't even remember, but the funny thing is the YouTubers that came out and started attacking us, now one by one, these guys are going, oh, this is my last AMC video. Oh, I'm leaving now. Like, good for you. Good for whatever they're doing if they're tired. But, man, Core's coming out and telling us to sell APE. Meet Kevin coming out and telling us to sell APE. At the time when the last thing you want to do is sell your APE shares into the market because, say this, if we all sold our APE shares today, the price would skyrocket because you're fixing supply and demand because the institutions would come and buy that up and close their positions.
Not only that, they'd be able to distribute to Europe. The fact that Europe can't buy is all I need to say.
I'm so glad you brought that up. I was talking to Elohim this morning, and I said the simple fact that they are not allowing Europe to buy shares is because the European exchanges know there are no shares to sell. There are no shares to sell. That's why Adam Aaron had to create 5 billion shares. He's going to come out, offer the 425 million, and give all these institutions one chance to buy any over allotments past that 425 million. I think there's deals being brokered right now with Citigroup selling these shares at premium prices. Adam Aaron has created his own stock exchange by doing this with Citigroup.
And that's the biggest reason I think they were telling us to sell. If people bought their APE and just sold it, we would have never heard about some people not getting them or Europe just turning off the ability to buy it. Because I know people still can't buy it over there, and we would have never heard about it. But it's a bigger deal because most people held. I believe most people held. I'm pretty sure we did, obviously.
Think of this: the year, and I know the German apes are mad at this right now, but it's actually a good thing. The European markets don't engage in payment for order flow. They don't allow naked short selling, and I don't think they allow failure to deliver. It's not like we do here. I mean, it's a joke here. So you would think if they don't allow those things that we want banned here, then they know that they're selling. They're not going to sell fake shares out into the market. The European markets couldn't even handle that right now because of what's going on in the UK. They almost had a complete collapse the other day. The problem is America's markets are so morally hazardous. They will sell shit they don't own until the freaking moon hits the earth because they know that money isn't real. It's absolutely egregious it's so disgusting what is happening right now. And I know this space call is going to end up somewhere. I know it right now. I know there's people on YouTube watching me right now from the MSM. They like to watch this shit and then hit me up in my DMs and see what I'm talking about. Hell, I had somebody from Fox hit my DM up right before Adam Aaron talked about checkmate, saying, what does he mean by checkmate? And I was like, I think he's going to do a dividend. It's
I'm not surprised you're not on CV Payne yet. You You should get that kind of exposure. That would be helpful.
Man, I don't think there's anything I could say on there that the man wouldn't just cover himself.
Yeah, but I think it's good to get retail space out there. You know, I mean, it's one thing if he says it and he's a small voice, but that exposure, it kind of sucks, but it gives you a lot more credibility. You get more people listening, and they would follow and listen to you. I think that's one of the things that Trey did by getting Trey and Matt Kors getting on, mainstream media. So, and I think you have the right motive. So, if it gets you the right exposure, you use it for the right reasons, then it makes sense. And
I've turned down a couple offers on that. I'm if the whole community came out and said, yeah, go do it, the way I would do it, I would say, all I want to do is bring a big fucking chart up onto like a big marker board chart and just draw Bigham's supply and demand curve that he posted and go, there's nothing else to talk about except the fundamentals of the stock market are being manipulated by the market makers. There's nothing else that matters. They are selling shares that don't exist, and they're ruining supply and demand, which is causing us to not have price discovery. And the funny thing is I personally believe we are buying ourselves into a lower price. Every time retail comes and buys, we're buying shares that don't exist, which is diluting the price because those shares exist in stealth out in the open market, but on book, the shares outstanding for the company, they do not. That's why Tesla ran the way it did, because when Musk did all these share offerings, he knew there were shares out there being short sold that didn't exist. That's where all this money comes from Tesla. For the share price, anyways.
Well, what do you think? I mean, it's interesting. You can't buy APE on computer share, but you can still buy AMC on computer share.
Isn't that funny?
Right? Hey, I just want to let you guys know that the FTD report for the beginning of September is out on the SEC's website.
Thank you. That's exactly what I wanted. They actually came out with it early.
Spence, I just got here, and I have the most important question of the day here is, Spence, why are you so jacked when our price is in the dirt?
Supply and demand, man.
I'm just kidding.
If everybody's buying, I've never seen a stock go down in price because so many people wanted to buy and hold it.
Also,
I mean, it's just fucking stupid at this point.
Also, this is my last AMC video.
Oh, yeah. Yeah, you're one of those, huh? I got to move on to gaming and showing off my dildo collection, I guess.
Okay, I'm out of here.
So, see you, man. What's up, DMP? What's going on, man?
Hey, what's up, Spence? How you doing?
I'm good. I'm vibing.
Yeah, of course we are. Hey, I do have a question. When you talk about, this is in general, like what Adam Aaron's doing with this preferred stock, and he's working with Citigroup, and Citigroup's trying to broker a deal with whoever. Just in general, not using AMC because I don't want to think of spreading FUD or anything, but what happens when they come up with a deal, say it is with Citadel, that for the $425 million? How does that go to lit market? Like if they brokered a deal, say it was X amount of dollars per share, when a stock market opens up, does it gap up to that price of what they negotiated? I'm just curious of how that process works.
My theory on this is, one, it's got to go through the exchange. When they sell it, it's got to be exchange related. But what's going to happen is when they buy the APE shares, it's basically going to fulfill the buying pressure of the synthetics that are out in the market. When they create synthetics or say they create naked shorts, there's no buying pressure contributed to a naked short because nobody ever bought the stock and nobody loaned the stock or borrowed the stock. Now, the problem of what's going on with just buying is when we buy synthetic shares, it's diluting the price because there's no ratio between the outstanding and the market. There's shares outstanding on paper, which are legally issued, and then there's the market shares outstanding, which you won't see until these are fulfilled. So I got the 8K I'm pulling up. The way this works is Citadel is brokering the sale, but the shares have to go through an exchange of some sort. Let me pull the AK back up.
It's not like Citibank is selling a block of it, like a whole. Like Citadel says, I want all fucking 425 million shares. Do you think that's happening, or just in your opinion, or do you think he's just going to different?
I think there's a bidding war going on right now.
You do. So that's my point. So if there is a bidding war and they come up whatever pre-negotiated price that they have, how does when the market opens for that, does that whole block just goes on like all 425 million because it's all at the same price? So that would gap it up to that price, wouldn't it? I'm just trying to understand it.
Here's the thing. There's probably multiple market makers out there that need to buy these shares. There's multiple brokerages and market makers that it's not hedge funds coming out to buy these shares. Maybe they are, maybe they're not. But the market makers and the brokers are the ones who need these shares. This is what the dark pools were made for, was for big block trades, so it didn't cause massive volatility in the markets. That's what they're supposed to be used for. What they're being used for right now is selling fake shares to retail. That's why all our trades are going into the dark pool. That's why we're seeing these wacky price explosions on FINRA, and we're getting alerts on our phone for 340 a share from E-Trade and all that BS, because they can't facilitate this out on the open market because then the price would go up. So they're shoving it in the dark pool. They're corrupting supply and demand. What Adam Aaron has done is given them an opportunity to fill those synthetic shares as real shares to trade openly on the market, which is going to cause a massive volume increase. Supply and demand will be corrected, and we'll see our price movement. Now, it's either going to be the writing from Citigroup agreement is that the shares have to be paid for the day of. No delivery will come unless the shares are absolutely 100% paid for the day of, which is going to shove a lot of cash into AMC's pocket. The interesting thing is they said they're going to sell 425 million shares for premium rates, which means they're going to.
What's premium rate you think, Spence?
I think it's going to be definitely over 350. Probably, if say this, Citadel comes in and needs 500 million shares, they can buy the whole 425 million at an agreed upon price. Adam Aaron said when I tweeted, please do not sell APE under $10 a share. Don't dilute APE under $10 a share. He came out like 5 minutes later and tweeted, why would I hurt my own stock?
Right.
We know APE hit $10 on open with corruption happening the first 30 minutes of APE opening on August 22nd. We ran 1.7% per minute for 30 minutes, even with the halts.
Dude, I remember that. I was watching it. It was fucked up.
If we ran 1% per minute for the 6.5 hour trading day, the price of APE would have been $340. What I think happened is they forced breaker halts by shoving too much volume through too quick to force the halts because they knew people were buying this shit like crazy. So they had to start selling synthetics past the 45 million FTDs, right? To dilute the price down. They knew it was going to run. If everybody would have just held the shares and not bought any APE on that day, I'm pretty sure we probably would have ran over $25.
Huh. No, that helps. I was just curious at how that, now lastly, and I'll end up, and I'll, drop down on the listener. So let's say they sell the premium of 350 and all retail starts buying in again. Do you think we're buying real shares or do you think we're still buying synthetics when retail gets involved?
Here's the thing. I think AMC is so far gone. I actually think APE probably opened up shares of AMC. I think people might have sold some and bought into APE, which opened AMC shares up. But what's going to happen is Adam Aaron's going to sell all this APE out into the open market, which we knew AMC and APE was supposed to be a 1-to-1. I think in the writing, the rules on conversion haven't been covered enough by everybody. And I actually wrote John Merriweather and asked him, are we allowed to convert our APE at will? I know if there's going to be a board recommendation to convert APE, then they say that they will request shareholder approval, even though it's not needed. From what I read, the conversion of APE, it is not required for them to ask us to vote on it.
Interesting.
So the way you fix the AMC share problem is you sell billions of APE out into the open market. You fulfill those positions. It runs. We sell. Then they convert APE over to AMC, and you fulfill that AMC position too.
Great. Sounds good, man. I'll drop down. Thanks for the info.
Yeah.
Info.
I'm still looking up the exchange stuff on the 8K because I read it somewhere. I just forgot what they said. So. If you guys have not read the 8K or the prospectus on APE, I highly recommend this evening opening it up, sitting down with a cup of tea or coffee, and just focusing and saying, I'm going to read this. I want to know what's going on. And it is going to open your eyes. And I would tell you to search up keywords such as over allotment, the maximum amount, and the language. Read the Citigroup contract that they wrote with AMC. Actually, let me pull that up. I'll just read that right now. Allotment. Yeah, here it is right here. This is the AMC Entertainment Holdings, Inc. Actually, real quick, if you guys could share and tweet out the call too, please, I'd really appreciate it. I keep forgetting to say that. I wish some of my other crew was up in here, but it's pretty early in the morning. I know Tara's probably asleep, so. But this is Citigroup Global Markets, Inc., right? Dear sirs, AMC Entertainment Holding, the company possesses subject to the terms and conditions, blah, blah, blah. This distribution agreement dated September 2022. There's no date on it because obviously it's going to be, they hold the date back on when they issue these things. They probably issued it today, actually. The 26th is when this came out, but the 30th is probably the day this will be dated. Between the company and Citigroup Global Markets, Inc. to issue and sell to Citigroup Global Markets, Inc. the securities specified in Schedule 1, and this is in after quotes, the purchased AMC preferred units, and solely for the purpose of covering over allotments to grant to Citigroup Global Markets, Inc. the option to purchase additional securities specified in Schedule 1, and to include only if there is an over allotment option. And in the writing, they even say, it's so small. Let me pull it up. This option may be exercised by to Citigroup Global Markets, Inc. at any time, but not more than once. How that reads to me is that there's 425 million shares, but AMC Theaters has authorized Citigroup to make in writing purchase agreements for over allotment, saying they sell all 425 million APE and another institution needs another 100 million. They have one chance to buy that over allotment through Citigroup during the share offering. If they don't, then they're stuck. It's not last one out the door. It's last one to the door, got locked in the burning building. So I'm pretty pumped. If you guys all just got here, the basis of this call is just basic supply and demand and how it's being manipulated on the market. It's absolutely insane. If you have a limited supply, which should be the 516 million shares of APE, and the demand is super high and nobody is selling after they buy it, then the price should consistently go up. That's not happening. It's not happening. And the only reason that should not happen is if somebody is selling more supply into the market that doesn't exist, right? If you have, let's say this, if you have 40 cars on a car lot and you have 100 buyers, you're going to increase the price of those cars to get maximum value out of them. But if you have 4,000 cars on a car lot and you only have 100 buyers, you want to drop the price of those cars so those buyers go out and say, hey, there's cheap cars on this lot, and you sell more in volume. And as more and more buyers come in, then you can start raising the price of the last cars. Here's the problem with APE and AMC. Somebody is selling endless fucking shares out into the market, and we're buying them, which is diluting our price. I'm not telling you to stop buying, but I'm telling you, the reason APE and AMC is going down is because everybody is buying so much of the shit that it's diluting the price on the open market, even though it doesn't register on our shares outstanding. What's up, Yer? How you doing, man?
Hey, I'm good. I was talking to Swing about making a program regarding FTDs, and I just got the data from my program. So APE was not the most FTD like last time. Like it was literally number one. Average FTD. Well, the max for it is basically 2,366,000. So I mean, it's still up there, but it's not It's not in the top 20 from what I'm looking at. But yeah. And then let's see. Yeah, but overall, yeah, I mean, it's been looking like the FTDs have been going down for APE, which kind of expected, but they been around the 300,000s from what I'm looking at.
I'm really curious about how they cleared, and this is what I'm saying about supply and demand. How do you clear 30 million FTDs with no price action? I just don't understand it. It's such a big supply and demand issue. 45 million failure to delivers were either brokers withholding shares from being delivered from the dividend, or it was from people purchasing shares that didn't exist. Let's see. I just got the FTD list up too, finally.
Well, I did notice FTD spiked up for AMC on August 8th. That's when it went from like 3,000 to 723,000 out of nowhere. So that's a huge jump.
Did you tweet this out yet, Yer?
Oh no. I'm just looking at the data. Let me tweet it out.
If you tweet, let me know. I want to retweet it. I don't want to go. I'm being lazy today. I'd rather. APE case only. It's absolutely insane what's going on with this. I've never seen anything like it in my life. I don't think anybody else has either. Just APE and AMC have been bottomed out before the market even bottomed out. And I don't even know anymore, man. It's just fucking nuts. But on the very basics of the market, it's crazy what's happening. I've never seen a stock that everybody wants to buy the entire float go down in price. And the biggest problem is that institutions don't have to report their short positions. That's one of the biggest problems. The short interest is probably way out there past anything that's being reported. Because if you only have people buying, you don't have people selling, short interest is being maintained at 20% according to reporting agencies, which is probably false. Then how is supply and demand affecting our price down? It makes no sense whatsoever. It's completely illogical. Even with the debt, we're having quarter over quarter surprise earnings, beating estimates, and I just doesn't make any sense whatsoever. That's why I literally do not care what the price is right now other than for buying. And I've been saying that for a while. But every single month we go further into this, we get more data that makes my conviction even stronger in this play. That's why I was pushing so hard on Adam Aaron a week ago, because I wanted to know what was going on with the APE share offering. And not even a day later, they posted the prospectus and the 8K on it, because he knew the community was worked up. He didn't want people leaving the play because we didn't know what was going on. These people on the YouTube chat are going crazy, man. They're tearing up some shell in my YouTube chat. That's funny. Anyways, if anybody has any other explanation or a retort to what I'm saying, please come up and say it. I mean, I've taken multiple college level economics courses and balance sheet, market structure and whatnot. I'm degreed, and I'm looking at this and I'm basing it off of market structure, which is supposed to be the foundation of our markets. We all know they're naked shorting companies. We have proof that they are naked shorting companies into the dirt to destroy them so that these big e-commerce institutions can buy up the market share. It's all there. It's all in black and white. It's the biggest fraud in the history of the U.S. stock market. And it's just happening right in front of the faces of our regulators, which I think part of the problem for that is that it takes so long. Any actions, like all the actions for 2008 and the market collapse, nothing happened till like a year or two later. You didn't see anybody in trouble until a year or two later. Properties. So if anybody's got anything else to say about that, please come up. I just wanted to do a quick call today. It's not even a theory. It's basic economics. It's literally 101. Supply and demand, blah, blah, blah.
What's up, Spencer?
Hey, what's up, man?
Yeah, I just saw that clip with Kenny Boy, and I think I tweeted on one of your tweets, him adding stress to the feds that they need to hike up more rates in a quicker time span. And I really don't think he cares about inflation. I just think he cares that he needs to have more pressure on retail to sell stocks.
Yep.
I mean, you increase interest rates on everything, it gets harder for, middle class or retail in general to afford things. And where do they look at, to get liquidity? They look at their own stocks, their own portfolio to liquidate, to get capital, to start paying off things. So I think he's just trying to add more pressure on, the feds to do that in order for us to have more pressure on us selling our stocks. So I was just laughing. It's just, he tries to add, facts or his knowledge on it, but at the end of the day, he has his own agenda to kind of relieve pressure off these stocks. So,
yep, that's absolutely perfectly said. Inflation is Ken Griffin's best friend. Anything that makes it more expensive for retail to live right now is less buying pressure on these stocks that he's facilitated a market for that's not legit. He needs us to lose our money so that we quit buying this shit, and even better, sell. Because you better believe that any institution that's short on this stock also has puts to the upside if they're not holding shares long. They'll play their puts, and then they'll flip, and they'll go net neutral, and they'll play the upside. They got computers that do it for them. But every time he comes out and talks, you can just, he does not have a poker face. You know what I mean? He is like an open book. When he comes out and talks, it's only in his best interest. He talks like, oh, I care about Chicago and this and that. And he tried to buy the mayor of Chicago or the governor of Illinois, whatever it was. He tried to do that so that he had political influence in the city. There's a lot of Chicago politics that happen, and it's all involved around banking. Go ahead.
No, the thing that bothers me is just every question is scripted. Like, he knows exactly what questions they're going to ask him, and the right questions aren't being asked. As if AMC and GME is a fallen, like, broken business, why do you increasingly use dark pool percentages every day? I mean, at one point it was like at what, 30%, and now I never see it below what, 50. It's always 50 and above every day. So I don't know.
I think there's a massive pool of buying pressure stuck in the dark pool that they relieve every now and then, which is why we have these little price actions, the shoot to 34, the run to 27. But if this many people globally are continuously buying AMC and APE, and we hold over 90, 80% of the float, whatever it is, there is zero logic in the price going down. Absolutely zero logic in the price going down. Unless there is shares out there that don't exist that is diluting the price action. It just, there's, people will be like, oh, it's, the market mechanics, and you guys don't understand this. And they do everything they can. People who are doing fraudulent things will try to convince you otherwise of it, lest they get caught. The best way to do that is to try to demean you and make you feel stupid. And what
do you think about the increasing reverse repos? I mean, when this fall started, we were in what, the millions, I believe, or the lower billions, and now we're in the trillions market. What do you think that contributes to the increasing reverse repos?
I think it's a runaway inflation. I think it's completely runaway inflation, and they don't know what to do. They don't want, so we have midterms coming up. The last thing that Gary Gensler and Jay Powell and Janet Yellen want to do is blow the market up before midterms. It would look super, super bad. They want to let midterms roll, and then they're going to come out extremely aggressive after their political changes happen, which most likely will. I don't, whatever, left or right, I don't care. Personally, in my personal opinion, any congressperson that has decided to go against the stock trading ban needs to be removed from office almost immediately. That's like you're caught red-handed, you're wearing your corruption on your chest type of thing. But nobody wants this to blow up before midterms hit. Now, when you had the UK just a couple days ago almost have a completely collapsed economy as they were dumping gilts, and the banks had to come out and stop it. They had to buy them up before the economy collapsed. That doesn't stay contained into one country. That rolls into other countries big time. And it's funny that happened just after Ken Griffin reorganized that hedge fund in the UK. Ken Griffin is the source of 90% of the bullshit that is going on in the markets right now. They tried to push this narrative for the past couple months that he's not really the problem, he's not really the villain, blah, blah, blah. These dudes are so morally hazardous that they will literally lose billions of their clients' money, and while at the same time buying $100 million homes and buying $26 million copies of the Constitution.
Yeah, I remember. Oh, his son told him to buy it.
Yeah.
Like, what?
He gave $2 billion to Melvin Capital as they were collapsing under their own weight. That money was not his. That's his client's money.
Mm-hmm.
I think he gave that money to Melvin, basically said, here's a little float for you, but I want you to go long on Facebook and these other plays because we're going to short the shit out of it. Facebook collapsed almost immediately after Gabe Plotkin went long on it.
Damn.
It's this type of crime can only go on for so long before the corrosion of the crime destroys the foundation of the entire market. This is getting ready to end. October 1st is the new fiscal year. There's a lot of money being rolled over. Budgets are getting redone. we have, Putin talking about coming back to the table for peace talks. I think they know the whole Ukraine thing is over, which in my mind, Congress is just using it as a money laundering operation. There's shit going on. My buddy's over there fighting right now with them, a former Marine. So he tells me what's going on. There is fighting over there, but the amount of money that America has put into Ukraine in the past 3 months is insane. There's so many things going on in the market. Today, every single dollar of the $5.5 billion the Vatican owns in assets is being returned to the IRO today. So they know something's going on. When the Pope says to return all the money back to the Vatican because he knows something, but Martha Stewart goes to jail for pulling her money out of, what was it, Enron or whatever? That's just crazy. It's all insider trading. So they're waiting to see. They're waiting to see where the buck is going to stop, who's going to fall, who's going to collapse, and then the markets can get back to normal. But we will not see these markets back to normal until one of these big market makers defaults. And what's going to happen is if it's Citadel, then Robinhood's going to default. Anything you have in Robinhood's going to be valueless because they're not properly insured. They don't have money for it. It's going to be freaking crazy. That's why I've been a big pusher of DRS, because DRS is a on-the-book registered cash position only. The chances of computer share going insolvent are the most minimal you can get.
Yeah, I DRS about almost a year ago with my GameStop, and I do have Charles Schwab. I mean, I've called numerous times just to make sure, and they did inform me like, hey, we would actually ask you if we can borrow the shares. So I just kept my stuff in there, but I might just make a phone call on Monday to DRS my AMC. Yeah. But yeah, that's all I wanted to say, man. I mean, and then one thing is the graph chart of the value of the currencies, how every currency is going down but the US dollar.
Yeah.
And I'm just like, inflating numbers isn't the best way to go. I mean, the US has been in debt for how long? And our value of the dollar is beating the pound. That makes zero sense to me.
Yeah, that's a bubble in my opinion. The dollar just going up exponentially while the other currencies are going down doesn't make any sense when we have this much debt and we just printed all that money with high inflation. I don't know. There's something about to happen in the markets though. I think everybody knows it. The UK just had the first tremor, which was a big deal. That could have, they even said, it could have been a Lehman Brothers moment, but they were on the verge of collapsing the economy that day. So what's up, Aurelius?
What's going on, Spence? I just jumped in and I heard you say something about the Vatican request back. I don't know if you would want to just touch on the rear end of that point that you were making there. I'm interested in what's going on with that. I can't find anything on the internet about it.
30th, which was about $5.5 billion. He recalled everything.
So that's today, September 30th is today.
Yep.
Yeah. And that was just public news?
Yeah. Let me find it. I tweeted it out a while ago.
That's pretty interesting, man. I guess they're you got to think about what's going on in Italy too. Italy's at risk of default. Their credit default swaps are just, the price of their default swaps on their government bonds are like really, really high, relatively speaking.
Yeah, here it is right here. Pope Francis on Tuesday imposed an October 1st. They said September 30th initially. October 1st deadline for all Holy See offices and Vatican-linked institutions to deposit their assets with the Vatican Bank. So the Institute for Religious Works, or the IRO, is basically the banking portion of the Vatican. All assets must be transferred by September 30th. And the reason that they do this, you don't pull all your assets back unless you're worried about them being seized or becoming valueless.
So who did they have investing this money? I guess it's not disclosed who's investing their money then.
If you read the Constitution amendment they wrote out from the Vatican for this policy, the patrimony office known as APSA, in a bid to end decades of mismanagement that culminated with a scandal over 350 million euros investment in a London property. So basically, the Pope sees all the assets out being managed by different branches of the Vatican, and he saw some corruption going on and they were being mismanaged. So they're calling them all back. But the timing of this to get it back by September 30th is more than likely because some people probably racked up some debt that they weren't supposed to.
That's interesting. That's a very interesting point.
With the power the Pope has and the power the Vatican has, if somebody came to the Vatican and said, hey, one of your septums or whatever came out and made a $50 million bet and lost and did this and that, you owe us money, the Vatican can just be like, yeah, no.
Yeah, we're not going to pay up. Yeah,
it's the Vatican. They can just say no. Nobody can touch them. So
that's true. That's very true. Man, these markets, man, are just acting so crazy. What's your take on it right now?
It's all fraud. It's supply and demand fixing. The biggest thing we're going to hear about, one, is failure to deliver. Like Yair just posted this. They're lower than last time, obviously not 45 million, but AMC having over 2 million failure to delivers on $8.39. If those are covered and we went down in price that entire time, that is a violation of a rule of supply and demand. Buying the stock should not make the price go down.
Yeah. But I was more so, I know this is, y'all talk a lot about AMC, but I was wanting to get your take on the broader market. You made a couple comments about market makers, and I share that sentiment with you, Spence. I think if too many people run to the doors, there's only so much that these market makers can handle in terms of liquidity, man.
Yeah.
And you already see the pension funds, and this has been common. This is news that's been out lately. These pension funds are liquidating some of their U.S. equity positions, probably most of them. Did you hear about that?
Yeah, it's going to get bad. What's happening with the market is there's constant liquidations happening, and it contributes a lot of it to phase 6. The new initial margin requirements cause liquidations. Every time these market makers sell securities they don't own to keep the market moving, they go further into debt, which means they got to have more margin requirements. If you sell securities you don't own, you put it on your book as assets sold, not yet purchased, which we saw Citadel had $65 billion worth in the 2021 proxy, I think it was, in their annual statement. These market makers have accumulated so many securities sold, not purchased, that they're in a massive amount of debt. They're probably doing multiple credit default swaps on it. They're doing multiple swaps with these FTDs. And I think what you're seeing in the overall market is these big funds and these big market makers liquidating positions on blue chips to pay for these other stocks that they're selling short that they can't afford.
Interesting. Very interesting. Yeah. So you're saying that there's new requirements for the market makers? Is that what you were saying?
Yep. If you go to Bigham's page, AMC Bigham's, he's got all the phase 6 stuff out there. Basically, phase 6 was where they came out with new initial margin requirements for certain situations for funds and market makers and banks.
Do you know what percentage those margins changed by? Was it a minimal change or was it pretty significant?
I'd have to go back and look it up again, but it was pretty significant.
Wow, man.
Yep. Because they know.
that's bad for a situation like right now. Like you do something like that while everybody's running for the door, like that's a recipe for disaster, man.
It's actually probably going to save. It's a recipe for disaster for the market makers and the people who are trading illegally. But by them raising initial margin, it's helping deflate the market by having liquidations.
That's true.
Facebook, Snapchat, Google, Amazon, all these stocks that were huge pandemic stocks because a lot of money went out to the average, Joe Six-pack. They bought so much shit from Amazon that it overinflated the price. Netflix was what everybody watched, so everybody had memberships. It overinflated the price and created this big bubble, which is deflating now.
Yeah, absolutely. But the thing going on in the UK, if you look at this, I just put it up here in the Nest, you can see how much the bond yields changed from early September, like mid-September. They were about 3.25% yield. They spiked to 4.5%. And what a lot, these pension funds in the UK, they're leveraged long on a lot of these long dated bonds. This is a 10-year bond right here. And, because they're so leveraged, the nominal value of their portfolios just dropped drastically. And to be able to cover that, they're having to sell U.S. equities, or that's the word on the block. So I just find it so awkward and weird that markets are still rallying in the face of this, knowing that these UK pension funds that are not small they're selling U.S. equities right now as we speak.
Oh yeah. So then didn't I hear that Citadel just went short on treasury bonds? Is that what I heard?
Oh, did they? I didn't. Oh, so you're talking about the hedge fund side of it? Yeah,
that's the biggest problem right there. Citadel's the biggest conflict of interest I've ever seen in my life.
I swear, man. How does he get away with that, man?
A market maker, broker, hedge fund, bank?
Makes no sense.
They get away with it because they lobby these politicians. The politicians recommend regulation that goes to the SEC. The SEC is in the back pocket of Citadel. It's a revolving door. So, you have Gary Gensler coming out, and they were talking about the 13F2 reporting of short interest, the new form they were going to report on. And I was like, yeah, that's going to be great. Anything over $10 million short, you got to report that. I think that's a great thing. Well, they delayed it. They're like, we're going to extend the comments period. Anything that would bring true exposure to the market and the fraud in it is delayed. Or like we just saw with the stock ban, the stock trading ban in Congress, they're now talking about they're not going to vote on it because they don't want it to stop.
Yeah, man, it's definitely ridiculous, man. But there's a lot of people predicting, man, after seeing that move yesterday, I really thought that today we might have some type of capitulation move.
I think Monday you're going to see something.
Limit down?
The fiscal year start is a big deal for government and banks. The change on the government fiscal year. So there's a lot of money that's going to end up in limbo for a day. So we'll see, though. This price action is completely the SPY doesn't really have too much to affect on AMC and APE anymore. But even that, with the SPY a little green today, the price action on APE and AMC could only be contributed to failure to delivers, naked shorting, or that we are buying shares that shouldn't exist and we're diluting the price. That's it. There's no other reason the price would just go down if we own most of the stock.
Hey, Spence.
Man, I wonder if there ever be a way to take those people to court over this. If there was enough people that signed a petition.
There's already multiple class action lawsuits going on against Robinhood because of this.
Yeah.
And anytime I say lawsuit, it ends up where I'm attacked all weekend and people try to spin it that I'm suing Adam Aaron. I literally hosted a space about filing class action lawsuits against Robinhood for January 27th. And Lou tried to say that I was talking about suing Adam Aaron with his ketchup stain on his shirt and his sidewalk gear. They do not want us pushing for action against anybody, even Adam Aaron. If I'm a short seller, the last thing that I want the retail base that owns the float to do is to push Adam Aaron into being more aggressive. I want you guys to stay silent and stupid and cultish so that you don't tell Adam Aaron what you want done, because the retail investors will always be more aggressive than the CEO.
Man, could you imagine if they had to report like instantaneously on their shorts?
They will never force them to do it. If they did, you would see the short interest of AMC is probably over 140%.
I just wonder what that would do to the micro environment of a lot of these stocks, like the price action. It would just that would create like a whole new dynamic in the market. I don't even know. That would be pretty wild, to be honest.
You know, the whole anything that can happen will happen.
Yeah.
Well, any fraud, any crime that can't be proven will definitely happen. And as long as they don't require people to report their short positions, these institutions can short these companies as much as they want and get away with it. That's why they're so terrified about what's happening. When we saw the Blockbuster and Sears spikes on dead stocks, why are these stocks still, why are these tickers even still available to see? I don't understand that. It's like they have to keep the ticker active so that they can hold all those naked shorts in those positions, because there's no way for them to clear them, because if they did, they would be buying back billions of shares. Shorting a company down to a penny, unless it's going bankrupt under its own weight, it should just be an instantly reported crime. It's just not possible.
Yeah. Are you keeping up with this HYMC development? I heard that AMC is buying, or they're a part owner in this this gold mining company. Are you keeping up with that as well?
Oh, yeah. Since day one, man.
Bro, I think the biggest take home about that is if gold goes above $3,500 to $4,000, that mine is going to be uber profitable, man.
Oh, insanely. They're going to be profitable probably by Q2 of 2023, just with the prices we're at now.
Yeah.
But if gold and silver do spike, say silver hits $30 a share, they are going to make an insane amount of money.
Well, weren't they trying to investigate some type of new method to extract the gold and the silver?
Yeah.
Is there any new developments on that or no?
Yeah, right now they're still using their leaching pads, which are producing maybe like $10 to $13 million a quarter. The new process is called POX processing. It's like high temperature pressurization processing.
You said
like
POX?
POX, POX.
Oh, okay, POX.
Yeah, the Russians actually use it. The interesting thing is they don't have to use as many consumables in the form of hazmat, which is super expensive right now. The cost to process the material with the POX is like half of what it is with the leaching pads.
Wow. So
their profit margin is going to be way better.
Wow. I wonder why more companies wouldn't do that.
Well, it's all about getting it set up, and it takes a lot for them, the technical studies that they have to do to make sure it's operating correctly. But the biggest thing is a lot of mining companies that are exploratory, they don't even have any equipment. They're just looking for deposits so they can lay a claim and get investors. Highcroft has all the equipment. They now have the mill. Back in like 2008, they didn't have a mill on site. They had to drive ore off site to be milled. They have a mill on site. They have the heap leaching pads, and they have the POX processing now. So in 2023, which is when she said they would restart, Dr. Garrett said they would restart the mining operation. They're going to be processing heap leaching pads out to the end of 2023, and they're going to be processing through their POX processing. So they're going to double their production in 2023.
Wow. Let me write that down. You know, man, right now we're quantitative tightening, which is, raising interest rates and selling bonds in the open market. The Treasury, the Fed reducing its balance sheet has been, weighing on the price of gold. But really, in the face of all that, gold has actually really held up its price pretty good. But whenever we start lowering interest rates, we start quantitative easing. I think the dot plots show that we'll start lowering rates, maybe the mid part of like 2023.
Yeah.
That's going to be when gold really, really catches a bid, man. And something like HYMC, what is it, 63 cents now?
Yep.
I mean, these gold miners like this, under those circumstances, they just go nuts, man. They go nuts. If you look at like 2008, 2009 to like 2011, 2012 period, I mean, there were gold miners that did 50x, man.
When you see how Dr. Garrett, the CEO, Diane Garrett, how open she is, she's completely just out in the open. She says exactly what the company wants to say. She's not scared. She's got excellent. I've never seen a mining company produce data the way that they are. They're coming out super, super professionally, showing the data, showing the surveys, showing the drill patterns. They've literally 3D graphed this entire area of Highcroft Mine, right?
Yeah.
I think it's the fact that Sprott is in on this should be a wake-up call to everybody. And I know some people probably bought in at like $2 or $1.90 or this and that. But keep in mind, there was literally just an article that came out yesterday stating that the downward price action in Highcroft was due to increasing short interest. So,
well, I'll tell you what that's about. That's a strategy that some of these funds have been running. They've been going long gold and short the gold miners, and
yep.
the thesis behind that is the price of oil, pretty much. But you haven't seen any bid come in because oil is really sold off from that 120 mark that it was at. But the same guys that were running those strategies are now talking about buying miners.
Yeah.
So,
if you're long on gold, what's the supply and demand that you want for that? If I own a bunch of gold, I want the supply to stay low because that'll increase the price of the gold that I'm holding too. So you don't want these mining companies to operate, which Eric Sprott came out 2 years ago. And this is what's interesting about him getting involved in this and on AMC. Sprott has been pushing an agenda of exposing naked short sellers for years. He's got a nonprofit called SaveCanadianMining.org. And he has a video out talking about how naked short selling is destroying Canadian mining companies.
Oh, I bet, man. I bet. So it's definitely in his best interest to be, on top of that, advocating for these guys to quit or to be more regulated or, be more transparent so people can be more aware of what they're doing.
Yep. Just so everybody knows, that was a sugar-free Sprite, not a beer. So.
Yeah, it's not quite 12 yet, is it, Spence?
Yeah, my thought process on Highcroft, which I own quite a bit of, my thought process is this. I'm hoping when the APE share offering hits, we see a nice price movement on APE. I want to take profit, load up super heavily on Highcroft while it's under $1 and wait for mid-2023 and watch gold and silver spike, watch the economy rebound, the markets will come back, interest rates will come down like you said. And then I'm just going to sit back and wait for this play to pay out, and I'm going to just walk away.
Yeah. I mean, but there's a bunch of good gold miners. HYMC, I talked to some guys that work at some funds in Australia, and I was passively listening a couple days ago, and they were talking about some smaller miners there that were in some very high quality areas, with very large, deposits that are not up and running yet. And these miners are penny stocks right now, and they're in some of the highest quality areas in Australia. And once they get up and running, whenever they do decide to start producing, I mean, the nominal share of these companies is just going to go ballistic. And you know, think about it like this. You know, some of these companies, these miners, they 50x'd after 2008. Now, imagine how much money is out there today and how much price action you could see today with the amount of money and that's available to commit and to inject into these companies' shares, right?
Well, here's what's really interesting. The chart will tell you everything. If you go to silver versus the XAG USD versus the dollar, you can see where silver plummeted when the pandemic was announced, which what I call is, you know, when the last high we had before the pandemic was around $19 for silver. It dipped through the pandemic announcement to 1190 and then started firing right back up with the stock market when the stock market ran like crazy and went to all-time highs. We are now retraced that pre-pandemic high. We're back to where we started before the pandemic hit, which I think signals very, very heavily with the Dow Jones, with the S&P 500, which I think still has a little more downside to retrace. The indexes are bottomed out at the pre-pandemic highs. We're going to go through midterms, and whether you're left or right, it doesn't matter. If conservatives take back over the House and Senate, they're immediately going to stir back up independent energy production. The cost of fuel is going to go down, which means the cost of everything else is going to go down.
Yep.
The economy is going to swing back, and you're going to see silver and gold start recovering back to the new highs where silver was, you know, the high of $30.
Wow, that's an interesting. You know, that's funny that you say that. I just made that comment actually this morning to my. I know a bunch of people that are hyper invest in oil, and I was like, "Are you guys even considering, you know, what the ramifications of the Republicans taking the midterms? Are you not worried about what that might do to the energy sector?" I don't know. Will it have impact, or does the president have the most influence over those types of policies? I don't know.
If Congress comes out and it's all conservative, like House and Senate's controlled by conservatives, the first thing they're going to push is energy independence again. So, you know, they can go round and round and president can issue executive orders, but they can't stop Congress from letting energy companies produce. Like if the president can just come out and, hey, I'm the president, Aurelius, you're no longer allowed to sell pizza. That's not how that works. That's not how the three branches work, you know? So
correct. Yeah, that makes sense.
These people that are super long on oil, if the U.S. kicks back up energy independence and starts producing, other countries like the UK are going to come to us and buy it, right? So there's going to be a high demand, but we're going to increase the supply significantly away from Russia. That could mean that the new supply is going to allow the energy prices to come down, which means the stock prices will also come down. When we were energy independent under the Trump administration, companies like ExxonMobil were in the dirt.
Yeah, they were.
I kick myself in the ass every day for figuring that out too late.
Yeah.
That Exxon run could have just been a complete retirement.
Yeah. I was playing golf with a guy because I was, you know, looking at the SPACs. I was QuantumScape and Lucid and, you know, paying attention to all these fairy tales.
Yep.
And I ended up pairing up with an older gentleman. Didn't know him. They just paired us together. We're playing golf and we started talking stocks. And he said, "Son," he said, "if you don't," and this was in 2020 when oil went negative. He says, "if you don't buy these oil companies right now with everything that you've got," he said, "in 3 years, you're going to realize that you made the biggest mistake of your life." And I didn't listen to him. Didn't listen at all.
Well, they pump this into our heads, you know, green energy. Oh, all the EV companies. These EV companies got so super inflated off of retail buying hype. Half of them don't even produce cars yet.
Yeah. And another thing, these oil companies they're very profitable, man, and they don't have a lot of debt, lots of them, and they pay dividends. I mean, they're just great companies to own, to be honest.
Oh, absolutely. It's like right now, like I don't even know what Exxon's at right now.
Oh, well, that's what I was going to say. My favorite narrative was the oil is going to $20 and these oil companies are going out of business. Kathy Wood. That was such a huge narrative when oil went negative. And I think that was why I was mainly too scared to buy. It's because I had totally bought into that narrative that the oil industry was basically going under, but that was a complete farce.
Kathy Woods was hyped, like really, really hyped up for a long time. But, you're looking back at, what's the date here? When was it at low? 2002. Here we are. 2020, March 6th on the pandemic. Exxon was down to $25 a share. I don't know if they've done any splits or not, but they ran to 104 when all the pandemic stuff hit and our supply chain issues started. And we shut off drilling and we shut off new leasing and all that stuff from the new administration. And now we're sitting up at still highs of, $88 for the stock, which is crazy considering that it was only trading at $61 before the pandemic was announced. So I don't know. I've even thought about getting ready to short these companies because
I think that's actually the play. And to be honest with you, man, I remember looking at Occidental Petroleum at $8 and $9, trying to figure out if it was worth buying. It hits $77 in mid-September, my man.
They've got to turn the energy production back on. California talking about getting rid of natural gas. Madness. What California is doing is creating a lifestyle that poor people cannot afford.
Exactly. It's going to cause a lot of lower middle class and lower class people to move out because they're not going to be able to afford to live there. And guess what that's going to lead to? Rich people are going to buy all the real estate.
Yep. And I'll tell you right now, a lot of Californians are moving to Albuquerque. I have seen our housing market right here is insane. Houses will go up on the market and be gone the same day. Even though prices are starting to come back down a little bit, they're still overinflated because the demand is so high. Builders can't even keep up. But everybody from California, a lot of them are moving to New Mexico, this Santa Fe, Albuquerque area, because it does kind of look like California-ish, but without the ocean. So you have the mountain backdrop and whatnot.
I wish that there was somebody that could do an investigation and show collusion between big money and the government of California, that in fact that this is really what they're doing. It has nothing to do with green energy. It's about getting the poor people out of there so that these asset management groups and wealthy people can buy up all the real estate at a discount so they can sell it back to all these people when they decide that they want to come back to California. Because
not only that,
that's what's really happening.
It reduces the amount of welfare strain on the system too.
It blows my mind, man. I didn't realize this till about a month ago, man. But that's definitely what's happening.
Oh, absolutely. They're trying to make it so expensive to live in California that the only people that'll be there are the wealthy and the industrial.
Yep. That's exactly right. But if for anybody listening, we've kind of missed the oil run. Some of these stocks, they pay great dividends, and you might get some price appreciation. It's possible. I think it's the future's too cloudy to say. It would have been a lot easier to say that 2 years ago. But for people that are a little weary about buying oil right now, I still think that you can get the same type of opportunity in gold miners. I don't know if you share the same sentiment, Spence, but I really think the same opportunity is setting up for mining stocks.
Yeah, well, if oil stocks go down, more than likely gold's going to go up. They're gonna renew the energy independence for the United States. We're going to start producing more fuel again, which is going to cause the prices to come back down. But in turn, and you got to remember too, the G7 put sanctions on Russia and China for gold and silver. Russia and Chinese gold is not going to be accepted in a lot of places now, and China's in trouble down in the Congo with the mining operations they have down there due to humanitarian rights. Silver and gold production in the United States is going to ramp up like crazy.
Oh, did the Congolese turn on the Chinese, or what is that?
I think the U.S. Congress imposed new sanctions on China because of it.
Oh, I see.
There's an article out there I read months ago.
Oh, I see. Oh, did you hear about the Ebola outbreak in Uganda?
Is that just recently?
Oh yeah, man. It just started, and Uganda is war torn. So two stocks that if you just want to keep your eye on something is what is that? Hold on.
That's how this started last time. Uganda had an Ebola outbreak, and then a year later we had massive COVID outbreaks.
Oh yeah, but man, there's like two stocks that they literally, and it's just like event driven biotech strategies. There's these two companies, they make vaccines for Ebola, and anytime you hear that Ebola outbreaks in Africa, these stocks, they just take off absolutely. And the thing is there's never a small Ebola outbreak. Like, it's usually pretty, some are much more serious than others, but they're usually always kind of serious.
Yeah, I remember the last one. I remember everybody in the U.S. panicking about it. I think, the big thing about this pandemic is they've now desensitized everybody to pandemics. People aren't going to care as much anymore. But yeah, it was good talking with you about that, man, because energy, gold and silver, everything's going to affect the AMC play in some form or fashion. I would love to see Adam Aaron come out, and while Highcroft is under $1, I would love to see him purchase another lot of shares directly from Highcroft to push that price back above $1, and to, that would help them maintain the listing requirements. But I think it would be great for them to average down their position just a little bit and give Highcroft a little more cash, even though I think they have like $150 million left on hand. So,
hey, going back to the energy thing for the California, our grid can't even handle summer days when people are charging cars.
I know.
I mean, I live over here too, and it's ridiculous. Like, you're having people buy all electric, but yet again, we can't even charge the cars.
Yep.
And then second, you guys were talking about the bonds and liquidating like Netflix and stuff like that. I think a big impact that happened are two things: Russia going, invading Ukraine. You know how Europe turned off, practically they turned off Russians' ability to trade in the stock market. And second, Evergrande, fucking up their economy in China. These brokerages can't use Chinese bonds or Russian bonds, as collateral. So I think they needed to use their portfolio to liquidate to meet margin requirements.
Did you see what they just did to the China IPOs?
No, what did they do?
They basically halted them. They said there's 2 or 3 of them that came out and they said, we're delaying this. And I think the reasoning is the executive order, the 14032, which limits the ability to use Chinese. If you're an American hedge fund and you've got money in China, they basically say you can't use that as collateral, right? You can't use it to meet margin.
Yeah, because their economies, what is it? What do they use? What's their currency?
Yuan.
Yeah, it's trash. I mean, who's gonna accept that as collateral?
Yep. So here's the funny thing: these IPOs that were pumping 28,000% in a day, all it is they're organizing these new companies in the Cayman Islands under certain underwriters like Deutsche, right? Yeah. This is American hedge funds pumping Chinese companies to cash out later to get their money out of China. So retail caught on to that, and there was a lot of talk about this LICN and LA whatever, these new IPOs from China that were coming out this week. They were supposed to launch yesterday. They delayed them because they knew retail was out here talking about jumping in and trying to cash in on the big pump. Well, if they have that, then they're going to lose their money to retail instead of their hedge fund in America selling off that Chinese stock really quick and pulling all their money back into the U.S. to meet their margin. It was just a big money laundering scheme.
Are you talking about the HBK, HKB or whatever?
Yep.
That went up, 2,000 in less than like a day, right?
Check. check who the underwriter is for the IPO, and check where they're organized out of. And more than likely, the 3 or 4 that I've seen have all been organized in the Cayman Islands under underwriter like Deutsche or JP or somebody like that.
Yeah, I remember no halts either, or at least one. And
yeah, they had some halts, but to run 28,000%, I mean, APE was halted 13 times, and we only ran to $10 because APE was about to be a runaway stock. It was going to absolutely moon. So they forced certain amounts of volume through the exchanges at a certain rate to trigger those breaker halts. And they did it enough to scare everybody away from the play. So, and then of course the 45 million failure to delivers too. So, but
all I know is something's going to happen. I mean, everything that's up must come down. So,
I really think we're getting close to this whole entire market crash is not due to bad economics or due to it's not necessarily the housing market that's doing it. What it is it's market makers have sold so many securities that they don't own. They've created this massive bubble. When everybody got their pandemic money and decided to start investing, they didn't have. Pete from Philly said this before the Twitter banned him because he was speaking too much truth. He said so many companies have been naked shorted to death that there's not enough companies in the stock market for all the money to go into, so it's too consolidated. I remember back in 2000 and besides the crash, in that time period, besides the crash, you didn't see really big, massive movers. Like it was a very stale market after 2009. And it took 4 to 5 years for companies like Ford to get back to where they were. The volatility in this market is 100% designed. This market crash is designed. It ran away from them when retail came in and decided to buy and hold everything. And now they're trying to figure out how to unwind it because what they need is the spot. Say the S&P, they need it to go down to like 320 so that their short positions mature properly and they can get out of the play at, maybe a gain or at least not a total loss. But what's happening is retail isn't leaving the play and we're supporting the market at where it is.
And to anybody that doesn't believe on certain, of this movement, you have to really think about if this isn't a play, if the meme stocks weren't a play, they would not be talking about it every day. Before 2020, I mean, was AMC even in the talks of, CNBC, Fox Business on a daily? No. But it's constantly, they're just constantly talking about it, constantly down talking like, oh, you shouldn't play it. It's a dying company. And, I mean, that should be proof in itself.
Yeah, they don't want us in it. Why would they, why do they care enough to tell a bunch of us who are just random people? Why would they care enough to tell us that? Even if we decided to buy, say this, there was a company that made dog turds. If we bought if we bought stock in a company that made dog turds, they would tell you to buy it until your fucking wallet fell apart because they would be shorting it as much as they wanted because they know there's no value in it.
Yep.
The reason they don't want us to buy AMC is because they are stuck in a short and they know the company is going to have real value. You got Q4 coming up with Avatar 2, which is going to be one of the biggest movies ever. Avatar 1 re-release beat out the entire box office. Avatar 2 is going to make $2 billion. Then in Q1, Q2, and 3, you have Marvel Phase 5. You have all these things coming up with all these movies like John Wick 4. And then you're going to have the retail popcorn in grocery stores, which is a new revenue stream, and the branded credit card. And keep in mind, like I tell everybody, AMC had 152 million people attend the theaters last year. If you took 1% of that and everybody used a credit card, that is a ton of money. So we have a user fan base a customer base to have these credit cards go out to, which on average, a branded credit card from a company like this, it makes that company on average $178 a year per active account. So there's big things.
That's nuts.
It's crazy. It's this entire play, like I said, and I got to get off here in a minute, but this entire play is based on supply and demand. The markets are all based on supply and demand, and it's not working properly. And any economist can see that blindfolded right now. It's just crazy. So,
and just to add one more thing before I leave. My bad, Nair. I'll just add one more thing. Before the 2008 crash, they were pumping housing bonds to make it seem like it was a great buy. Let's let that, settle in. If they really cared about retail and us losing money, they allowed housing bonds to be pumped up in order for them to sell the shit that they had to retail, for these brokers to sell. So everybody just take care of each other. We already did the DD. That's all I got to say. Thanks, Spence, for having me on here.
Yeah, no problem.
Yes, Spence. Thanks, man.
Yeri, were you saying something?
Yeah, I was just gonna bring up what's going on in Germany. Like their inflation is double digits now from yesterday, and on top of that,
jeez,
the Bank of England, they're basically printing more money now. I mean, they did have first signs of like their inflation coming down, but now it's like they're doing tax cuts to basically have more businesses going on. But also, it's like their pension funds basically got margin called, and now they're printing money to to stay afloat, which is kind of crazy of what's going on like overseas.
Yeah, the global economy is being affected by everything that's going on right now. I really think, and this is what we were talking about, energy, the G7 community needs America to produce oil right now, because we're literally outsourcing most of our energy from either communist or socialist countries. That's just insane. It's crazy. So, if America starts producing oil and then we strike a deal and we start sending more fuel over to the UK, that's an alliance-based economy that's going to be way healthier for the entire globe. So that's why I'm saying when this supply increases after November, I think it's going to be a pretty good thing. I'm going to personally be betting opposite on energy. So, but either way, AMC, supply and demand. Adam Aaron's birthday. I'm sure he'll come out with something today. He'll tweet something saying thank you or whatnot. But we don't know exactly when the APE share offering sales will hit. I do think it's probably already being negotiated. The institutions that need it are probably talking to Citigroup right now, giving in offers. I think they're going to end up selling the entire 425 million, if not more. And we're going to see some significant action when this happens, because if they sell more than 425 million because the shares are needed to fulfill positions, that's proof that there's more shares out there than should exist. That's what Adam Aaron talked about a share count for. This is going to reconcile any shares that are out in the market that should not exist. The first institution that comes in and says they have an over allotment that they need to purchase is going to show that there's synthetic shares out there. So either way, that's all I got for today. I got to go do some house stuff and all that good stuff. I want to thank everybody for coming, and Yair, Goss, and Aurelius, thank you for coming up and speaking. I really appreciate it. That was a really good space call on multiple topics. Right. So thank you for coming to the chat. Everybody, please like and subscribe. Really appreciate it. That was a super good call with some really intelligent people. Loved it. FTDs on AMC and APE are still through the roof. Don't let 2 million AMC failure to delivers is insane. It's still illegal. It's crazy. 100,000 maybe, but 2 million? It's just crazy. Anyways, you guys have a great day. Thank you for coming. Thank you for everybody in the comments. Really appreciate y'all. I'm going to kick rocks, and you guys enjoy your weekend.